Hello, everyone. Thank you for joining today's webinar on TTI's personal and corporate tax scenario, best practices using the worksheet. I hope everybody is safe and everybody is healthy. And for any of the accountants who just went through their January 31st deadlines, I hope they went well. My name is Jay Goodis, and I'm the CEO and co-founder of Tax Templates, Inc. My objective today is to spend about 15 minutes on the personal tax scenario worksheet, about 10 minutes on the corporate tax scenario worksheet, and then leave some time at the end for any Q&A. My colleagues are monitoring the Q&A and the chat if anybody needs some additional support. All right, so with that, let's just jump right in. All right, so on my screen right now, I have TTI's personal tax scenario worksheet. Before we get started, I want to focus on some elements to help you utilize the worksheet as efficiently as possible. The first thing I want to bring to everybody's attention is at the very top, we have links in the workbook that'll take you to different tabs in the workbook and also different areas of the specific tab you're on. So for example, if I would like to jump down to the dependent section, I can click dependents and away I go. If I want to jump back up to the top, I can hit taxpayer details or T1 base to take me to the top of the entire worksheet. I highly recommend using these links as they will help you navigate the worksheet much faster. To the left, we have other links, but they take you to different tabs. So for example, if we wanted to see the results of a scenario, we could go to T1 base results. And if we wanted to jump back to the tab we were just on, we can click T1 base. So highly recommend using these links to navigate the worksheet as efficiently as possible. Now, another really neat function that Excel has that's very useful, especially using this worksheet, is the windows. So in Excel, you can click under View, New Window. And if you click New Window, what it will do, it'll open up the exact same workbook. And if you have multiple screens, you can move one of them onto a different screen and actually have it go to a different tab. So that is an option available and something I recommend using if you do have multiple screens in case you want to see multiple tabs at once. All right, now to the left, we also have TTI's completion guide. And hopefully most are familiar with TTI's completion guide, but if you're not, it is a built-in wizard that will take you step by step through the worksheet. So for example, on the left here, you'll see that there's orange text that says client description. If I click client description, it will take me to the cell to complete along with a note of exactly what to do. So if I was going to complete a file for Mrs. A, I can enter in Mrs. A. And if you take a look at client description down below, once I hit enter, you'll notice it's now asking for taxpayer details. So I can click taxpayer details and go ahead and fill in the next section. So let's go ahead and maybe fill out a sample file for our client. So I'll go ahead and put in our client of Mrs. A. I'll select our province from the drop-down menu. I'll select our year end, and you have the option of going as far back as 2018 or as far forward as 2028. All known rates already built into the worksheet, such as future basic personal amounts, CPP deductions, and anything else that is known at this time. For all of our clients, we're going to want to include a date of birth. Date of birth is very important for many elements of the personal tax return, so highly recommend including that. If you need to shortcut it, then the best case is probably between the ages of 18 and 65, as many of the exceptions occur below 18 and above 65. All right, so the next step is I'm going to enter in some income numbers. So let's keep this one very simple. I'll include some employment income for our client, along with some eligible dividends and perhaps some capital gains. Now to the right, we do have note cells. So for anyone who needs to write any notes, you do have that capability. And for any Excel enthusiasts who are interested in writing their own formulas, you can do that as well in the note sections. So for example, if you want to do a present value formula, you can go ahead and do that in our worksheets. It's one of the opportunities we have to leverage everything Excel is able to do. All right, so once we're done entering our various income numbers, we can go ahead and mark this step as complete using one of the review ticks. So you want to keep an eye out for the orange cells. And the next step, it's going to ask for TOSI income. Now, in this case, the reason it's asking for TOSI is we included some eligible dividends and capital gains, and we need to know whether or not any of those will be subject to TOSI. In this case, we'll keep it simple, and I will just go ahead and move on to the next step. The next step is our carried forward balances. So down below is where you can put in the relevant carry forward balances for our clients. In this case, I'll put in some capital losses and some RRSPs. Now, when filling in the RSPs for the worksheet, it is very important to fill in the RSP contributions and the RSP deduction limit. We need to know both numbers in order to maximize and optimize the RSPs for our client. So please keep that in mind when using the RSP function. So the next step after this is going to ask us to fill in the dependent details. And this is really important because one of the key features we have in our personal tax scenario worksheet is we look at everything that may or may not touch net income or taxable income in the worksheet. A very popular item would be something such as the Canada Child Benefit. So even though that's not on the personal tax return itself, it does get impacted by the net income of the taxpayer. So in this case, if we put in a young child, our worksheet will pick up the CCB and, of course, other transfer payments such as the provincial equivalent, OAS, things of that nature. All right, once we're done with the dependents, the next step, it's going to ask us to confirm our net income and taxable income. So I will continue to follow our completion guide through the various steps in the worksheet. Once we've confirmed those amounts, the last step before we optimize is our tax credits and other amounts. The two cells that a lot of clients ask for is where do I put in my income tax deducted and our tax paid by installments. I have marked those cells with red X's so you can see where they go. And a lot of the information is actually hidden in the worksheet. As I've been scrolling through it, you might have been asking, well, where can I find things such as putting in amounts for provincial credits, or perhaps donation of stock options or capital gains exemptions? Well, the worksheet is actually set up right now using the minimal view at the very top. But if I select standard view or advanced view, you will see a lot more detail within this worksheet, but we are starting you off with the pieces that our clients have told us they use 80 to 90% of the time. All right, so moving on to the next step is I'm gonna go ahead and jump to my optimize results button. And to optimize, I'm gonna click the button at the very top, which says optimize results. And in this case, what we're gonna do is we're gonna look at all the discretionary amounts available to the taxpayer. In this case, it's RSPs, losses, and eligible dependents. And we're gonna look to claim the maximum amount to maximize the client's after-tax cash and minimize their personal taxes payable. Now, in this case, we actually have a very simple example. So the worksheet is going to claim the full RSPs, the full net capital losses, along with the eligible dependents. Now, one more important thing that happens when I click Optimize Amounts in Reset View, you'll notice that all those rows that you saw when we opened the worksheet are now hidden. So as you are now complete with the scenario, you'll notice that you're only seeing the amounts that you've included for your client. So from a review perspective, it is much easier to review that specific situation for your client. Now, once everything's complete, if you want to see the tax results, we can get there by clicking the base results link at the top or the base results tab at the bottom. So if I go ahead and I click base results, we are going to provide you with both the cash summary and the tax summary for the client. So if we follow the cash summary, our client has $150,000 in cash. They're entitled to transfer payments of $1,932. I'll show you what that is in just a few moments. We provide you with the taxes, the CPP, the EI, and the childcare expenses. So based on everything we've entered in the worksheet, our clients are going to be left with net cash of $133,992. Immediately below that, we do have the tax summary. So in this tax summary is what will match the personal tax return if you were comparing them, and also identifies the taxes payable that the client will owe on April 30th. Scrolling further down, you'll see that we have a carry forward section. So these are the carry forwards available for the following year to do any planning. And if you're interested in how we calculated all the numbers, we provide you with the federal taxes, the provincial taxes, and there is our CCB transfer payment down below. All amounts such as AMT, TOSI, rate reductions, health premiums, all those fine pieces are built directly into the worksheet. All right, so now what I'm going to do is I'm going to jump back to the T1 base tab to show you something very important. One of the things that is very popular about the personal tax scenario worksheet is the flexibility that it provides. Each one of these columns operates completely independently. So I can change the taxpayer, I can change the province, I can change the year end. Think of it as a personal tax return that allows you to go as far back as 2018 and as far forward as 2028, and you can change anything you like along the way. So where we were is I was explaining a few things. One, I was speaking about the flexibility within each column. So each one of them operates independently. So if you have Mrs. A and you'd like to run a different scenario for say 2021 or 2022 or try different provinces and such, you have that flexibility. Everything is driven by the client's name. So please go ahead and put in the client's name into each of the scenarios. This worksheet also supports all the 2021 rates. They are already built in. So for anyone who may be wanting to run different scenarios for 2020 or 2021, all the results that you run for 2021 will match the tax filings in April 2022. That assumes there aren't going to be any further federal or provincial tax changes. All right, so at the very top, if you are looking to do a plan more out than 2021, is you can go ahead and you can adjust the indexation rates. So the very top right here, you can include what you expect that indexation rate to be. And what we will do is we will take all the client's brackets, take all the credits that should be indexed, and we will index them by that percentage. So that is a really great feature for anyone who's looking to do maybe a 5 to 8 year plan, and they want to give their clients a better representation of their after-tax cash along with other after-tax cash results. All right, so another key part of this worksheet that I want to focus on is our T1 marginal tab. So in the T1 marginal tab, that allows us to build scenarios for clients who want to see the results at the precise marginal rates. So it's very often clients might come to us and they share with us their base scenario, which is where we are now, that they have taxable income of $92,434. And they ask, well, if I sell this extra property I have, such as a cottage or a rental property, what will be the after-tax cash or the results of selling that property? Or perhaps we have a client who's a little bit older, who has CPP, OAS, perhaps some RIFs. And they ask the question, well, if I take out more funds from my RIF, what will be my after-tax cash? What will be my OAS clawback? Things of that nature. For those scenarios, what you can do is you can go to the T1 marginal tab by clicking the tab at the bottom or at the very top here, and we can build those different scenarios. So let's keep it very simple that our client is looking at a $100,000 capital gain. I can enter in the capital gain and click optimize. And then what the worksheet is going to do is determine what the after-tax cash will be on the 100,000 capital gain, all calculated at our client's precise marginal rates. So in this case, again, it'll be every dollar above 92,434. So if I go ahead and I just jump to our marginal results tab, which again, at the very top here, we are now going to see what happens on that $100,000. So in this case, our client is going to lose $1,600 of their CCB transfer payment and have taxes of $9,314 at the precise marginal rates. So if our client has a $100,000 capital gain, they will be left with $89,086. All right, so the last feature I'd like to show you in the tax planning worksheets here is that I've always been a big numbers guy. When I was in public practice, I really loved the numbers and the schedules. But my experience, it was a little bit more difficult for clients to comprehend. So all worksheets in the tax planning collection, they come with charts. So you're able to show your clients the results or your recommendations in a chart format. And all of the charts are already set to print. So if you want to provide with your clients, you can. We are looking at my version of the TTI suite, so it has tax templates logo down below, but your worksheets will already have a logo, or if it does not yet, feel free to send us your logo and we will put it on all your worksheets to be in the footer. So the charts that we have is we show you the base cash, which shows you the impact on cash, and we also provide you with a base tax chart. So you can see the cashes, the tax, and you can see it both base, marginal, and then total, which is the base and marginal combined. All right, so just there's one question that just came in about foreign taxes and the sale of foreign property. If you click standard or advanced, we do provide you with the opportunity to put in foreign income and foreign gains and any foreign taxes. So yes, that functionality is in the worksheet. You just have to hit standard or advanced in order to see that information. Okay, the one final piece of information I'll just give everybody, which is a nice shortcut for anyone who's really comfortable with our worksheets and is not interested in going through the steps of the completion guide. At the very top, we have prepared, reviewed, and approved by. If you go ahead and just fill out prepared and put your name in there, what will happen is it'll actually skip the completion guide for the entire tab. So if you aren't interested in going through all 8 scenarios and following the completion guide, that is a shortcut available, but that is a choice you have if that's something you'd like to do. All right, so the next worksheet that I'm going to jump into is our corporate tax scenario worksheet. So the corporate tax scenario worksheet is very similar to the personal tax scenario worksheet, but for corporations. It has the same flexibility that I showed you for the last worksheet, in where each one of these columns operates independently. So I can go ahead and put OpCo, HoldCo, and SubCo all in one worksheet. I can do an 8-year plan for OpCo in the worksheet, 4 scenarios for OpCo, 4 for HoldCo. Again, lots of flexibility in the solution. It's also one of my personal favorite solutions. Is when I worked in public practice, I found it to be time consuming to be jumping between all of our schedules, schedule 1, 2, 3, 4, 6, 7, 21, and the list goes on. In this worksheet, all we have to do is include the various types of income, and the worksheet will calculate the results. So let's assume our client has some active income, some investment income, perhaps some capital gains, and let's assume some eligible dividends. Once I go ahead and enter all those numbers, if I just jump down to the corporate taxes cash section, there are our final results. So in this case, our client has $190,000 in cash, and we provide you with a full breakdown of those corporate taxes. So in this case, we have our Part 1 non-refundable taxes, our Part 1 refundable taxes, Part 4 tax, ERD2H, net provincial taxes, and there is our final net cash after corporate taxes. So very quick, very easy, and gets the detailed results that we need. Similar to personal tax scenario, this already includes various corporate rates that have already been announced into many years into the future. This worksheet does go until December 31st, 2028. Now, as we're building corporate tax scenarios, one of the things that we need to be mindful of are all the different types of balances that might be available. So if you scroll down below, or you click the link at the top, we provide you with a summary of all these key balances. So in this case, we have our NERD2H, our ERD2H, our GRIP, and our capital dividend account. So if you're doing planning, you do have these balances at your fingertips. Now, another key feature in this worksheet is we provide you with dividend recommendations. When it comes to paying dividends, the strategy sometimes changes depending on how much you have in your GRIP account, ERD2H, and in NERD2H. Now, the calculations can be complex depending on what path you go down, but in TTI's worksheet, we do give you the right answers. So in this case, here's our recommended eligible dividends and other than eligible dividends. Now, a common question that comes up is sometimes our clients are low on cash. So what I'm going to do is just create a quick adjustment here. You can make an adjustment either in the adjustment cell under taxes, or you can do it directly in the adjustment cell under cash. This is useful in case there's opening cash or other adjustments that need to be made. So in this case, our client has $42,400 in cash, and we're trying to figure out how much dividends to pay. So in this worksheet, you'll notice that we're recommending $40,000 of eligible dividends and $28,757 of other ineligible dividends. And that's more than the net cash available. The reason that's the case is we have taken care of the circular calculation on the dividend refund. I trust we've all been in a situation where we pay $10,000 in dividends, we get about 38% back, we then pay about $3,800, we get 38% back until we get to zero. That's exactly what these formulas do. So if I put in $40,000 of eligible dividends and I put in $28,757 of other ineligible dividends, you're going to see our net cash go down to zero. Now, as I mentioned at the beginning, everything is still driven by client's name. So if I put in OpCo in scenario 2, it's going to populate all the information for OpCo scenario 2. If I want to do a multi-year plan for OpCo, I can change this to 2021. And you will see it'll populate all the same information. And for key balances such as carry forwards, your ending balances become your opening balances. If I were to go look at our AII, for example, that's going to be populated, which could grind down your SBD limit. So all fine details like that are worked into the corporate tax scenario when doing a multi-year plan. Now, another thing that this worksheet has is it has tabs at the top, which will show you more information. So if I go ahead and click Advanced View, it's going to show me more information in the T2 scenario worksheet for more complex cases. So for example, you'll notice that we have a much bigger active business income section here, where you can enter in the business limit allocated, SPI, SCI, M&P if that applies to your clients. You'll notice that we have multiple jurisdiction information here, and we will again calculate the taxes by jurisdiction. And we also provide a foreign amount section for those clients. And there was a question on the T1 side, but we have this equivalent on the corporate tax scenario worksheet. And down in the contributions and carry forwards, you'll see all your losses, carry forwards, donations, foreign business tax credits, and so on. So if you want to see more information for more complex cases, you can use the advanced function, which will show those details. Again, if I go ahead and I jump to my T2 cash or T2 income tabs, you will see here that you can show your clients the results of your scenario that you ran for them and where the results are coming from. It can be a little bit easier to digest than the tab on the T2 tab. Now, a common question we get is the charts here show 8 scenarios. Is there a way where I can hide the other scenarios I don't need? Yes, you can. If in Excel, you'll see there's this little funnel on the right. So what you can do is you're actually able to unprotect the tab. So just go to Review, Unprotect, and then you can click the little funnel on the right here, and you can just go ahead and choose which taxpayers you want to take away and hit Apply, and then you'll see only the ones that are left. And for anyone looking to run different scenarios, such as a CCPC versus another private corporation, or again, you want to put in different corporations in the different scenarios, you do have that ability. So what are some popular ways that TTI clients use this worksheet is, let's assume that they're meeting with their client halfway through the year and they want to talk about an estimate of their tax liability. This is a great worksheet to bring up on a Zoom chat, and the client can provide some information and set them up from a cash flow perspective of how much they need to put aside for taxes. It's great if you're trying to put all your corporations for a group on one worksheet. In case we're paying dividends from, say, OpCo to HoldCo, you can put dividends paid to OpCo from OpCo into HoldCo directly in the same worksheet, so you can see the results of both corporations. And this time of year, it's also used a lot for compliance. So a lot of times the files will be prepared by a junior staff. What the reviewer can do is take the information directly from the file, or even have the preparer do it, and they confirm that the tax amounts on TTI's worksheet match the T2 file. It's a sanity check that the numbers are right and nothing has been missed. Okay, so one more worksheet I will bring to your attention today, which is really just a combination of these two, is our corporate and personal tax summary. It is exactly like the 2 worksheets I showed you. The only difference is it includes them both all together. So if you have a client and you want to be able to use all 8 corporate engines and all 8 personal engines at the exact same time, you have that capability. So you can go ahead and put, again, same flexibility, 1 corporation or multiple corporations, and the same thing for the individuals, 1 or multiple individuals, and run your different scenarios all in one worksheets. So therefore, you don't have to have the corporate tax scenario in one, personal tax scenario in another. Everything is condensed into this one solution. And for anyone who has a question here about married couples, if somebody is married, you can just go to the marital status, choose married or common law, and then in the worksheet, scenario 1, you'll use for spouse 1, and scenario 2, you'll use for spouse 2. All right, so there's a few questions that have been left over that I'll answer now, and then we can look to wrap up. It asked the question about, does the worksheet take into account safe income available? That's referring to the T2 worksheet. The worksheet here doesn't itself, but under TTI's tax accounting collection, we do have a safe income worksheet. So what you can do is you can open up TTI safe income worksheet, complete the safe income calculation, and then you can use that number in order to complete the analysis under the corporate tax scenario. Another option you have is, because we're in Excel, you can always link to other workbooks. So for example, if I want to move one number from this workbook into another, all I have to do is just use the equal sign, similar that you'd use between different documents, and then that number will come right over. So that's a great way to use safe income and corporate tax rates together. corporate tax scenario together, excuse me. Another question here is about the percentages. Does it do the percentages directly in the corporate tax scenario worksheet? It doesn't do it automatically, but if you'd like to do that, it's very simple to do. You can just take one number here, which is your total, divide it by the top number, and then off and away you go. One of the reasons we don't inherently do that is because things such as capital gains and such like that make it tricky, and at least on the corporate and the personal side. And on the personal side, we also have to deal with things with like transfer payments. So it's tricky to really give somebody a true representation of average and marginal tax rates unless we consider everything in one. So since there's different theories about how to do that, we leave it open and let the user go ahead and make those calculations inside the note cells themselves. All right, so my goal was to keep this to half an hour today. So thank you everyone for joining today's webinar. We have another one on Friday, which you can register for directly on our website on salary versus dividend optimization, and some more coming next week. So thank you all for being TTI clients. And if you didn't have your question answered or anything else you need, please send us an email at support@taxtemplates.ca.